All right, what's going on, ICA? I wanted to go over a couple of charts with you guys today and talk a little bit about that, that setup, the options, what do I call it? The options and position review, if you might. It's kind of like a position checklist, okay? So we'll talk about that. We'll actually use Apple as the example for it, and I'll fill it out and show you guys, and we'll take a look at it together. Okay, so let's go over this here. First off, I do want to go over the fact, we're starting off on the weekly. We're still in this uptrend, guys. It still hasn't broken in terms of SPY. Now, if I went back to that weekly, remember right here with everything on this that you can see, we're still below that value, right? We're below that that point of control. That's what it's called, where the highest volume of buyers and sellers still sits right above where we're at. So keep that in mind. That's acting as resistance. Same with this yellow downtrend. We are in this strong uptrend, but we've had some, pretty extensive drops in terms of volume week to week. Keep in mind, this is a big marble jar, right? Now this week isn't over yet, but I do expect it to be decreasing just as well. And you want to take a look. What happens when we have decreases? We usually have a big sell-off or a drop afterwards, right? As we get higher up and higher up in a certain area. Yeah, we could have a little fluctuation here, but usually if it decreases, it leads into a bigger sell-off because it shows that there's fewer and fewer buyers there. Look, we're really struggling already. The last couple weeks were pretty decent in terms of buyers coming back into the market. Call it a short covering rally, whatever. At the end of the day, price is where it's at. It's at 426, 430 area. But look at this area that we're in. It's blocked off with this white boundary that I gave you guys. This is the channel that we're in, okay? Because this was certain highs from here, and the bottom is the highs from here and also the lows from here. So, we're involving this little range of traders. Keep an eye if and when we do break this pink trend line, eventually it has to, sooner or later. It could be much further up here, we'll see. But when it does break that trend line, look for when it does finally close below that and start to create, a zigzag ABC pattern down, okay? Because you can expect that to be the, what would you call it? That would be it could be a potential wave 4. That's what I want to say now here. So if you look at this 1, 2, this could be a small 3, 4, 5. But you could even argue that there's this in here, 1, 2, 3, 4, 5, which means that's probably our wave 3, right? Okay, so if that's done and we're not moving up anymore, that would be a possibility, right? We would do something like come down to this, retest, right? Test the lower end of the boundary, maybe even go just a little lower before we head further up. Okay, so that would be my current prediction. Trying to show that it would retest that pink trend line or even the yellow downtrend line. Okay, somewhere in August that might happen. Do a double top right here. We did have a triple, right? All right, let's go a little bit closer. And also you want to go into, let's go back into the daily. Let's talk about indicators over here. Right, curling, MACD, not quite. Let me reset this. So there were a couple classes where I didn't really introduce OBV. OBV is on balance volume. What it really is just the addition and subtraction of these volume candles and these on a cumulative basis. And it's the same idea. It can show you divergence and convergence, etc. And in this situation, nothing really. You could tell me here that there is some divergence that's coming down here, while 3 to 5 here, we're going further up. So keep that in mind. That's a possibility. Let's analyze this a little bit further. MACD inconclusive, but starting to curl just a bit. When I double click into it, you can take a look. The size of the candles is the difference between that hot streak or cold streak, you may. That hot streak is, it's fluctuating, nothing major. It is on the downturn, if you may, but nothing major. It's still on a positive hot streak. RSI curl, stochastic, still extremely high up there, right? But just remember, it doesn't mean it can't keep fluctuating up here and keep making higher highs. So let's go in closer. Let's go 2 hour and 1 hour. I'll just take off we're just looking for divergence here, if you may. We have crossed here in our MACD, okay, 2 hour, but keep in mind this fluctuates a lot more. And that negative, I was gonna say earlier, we did fill that gap. So buy up to the top. Buy up is comparative there. We do have a little bit of lower volume, but that's still inconclusive there. So we also had Fed minutes that came out. Fed minutes didn't really say anything that we didn't already expect. Nothing really hidden in between the lines that would make people think otherwise. So at this point, it's still fairly bullish in terms of the market, but we've also run up so hard so quickly, there will be these little drops and sell-offs. So keep that in mind. Okay. All right, so if you're going to play SPY, let's draw some of our horizontal resistances on the daily. Oh. I don't know if you can hear my dog snoring in the background. All right, so when we go a little bit closer, so you can see this has been acting as some solid resistance here. And above us as well, where we just recently closed. So let's go on like a 5-day. All right. If we get this to come, it's not there's a bit of a head and shoulders, but it's fairly small. I think we'll come back down toward this pink trend line, but so like we're right here. You could go up first too, right? We go up first and come back down. So, we could do this. Keep in mind, this was, look at how fast we sold off up here. We were really pushed away from this. I mean, was that surprising? Like, think of it this way. How many on the big picture, right? This yellow trend line on a 2-hour chart. Like, I mean, look at that. Okay. And I got shifted, but right down there. Okay. But if you look at that, Is it surprising how fast it sold off once it hit that? No, guys, it's how many people do you think are waiting for that resistance? So yeah, we hit that, sold off. That would, should have been the first, notification of, hey, that's where everybody's standing. It can still break through, don't think that that's it. But the first push off, I do believe it's going to take 1 or 2, maybe 3 pushes for it to break through. Otherwise it's going to have to come back down here, deal with this supply a little bit more, right? On the low end, or on the shorter end is just down to this area, right? That's where I've got that drawn. That's still possible, but this down here is pretty much that Wyckoff with that sign of strength, last point of supply. And so you can expect a bigger retest before we break up above. Okay, bears and bulls do have to decide here, but right now everything is leaning bullish. If you look at flow, everything, it's all leaning bullish. There are a few things that are showing bearish, but it's all like, where is that bearishness? That bearishness, if you look at big money, they're saying October, November, December. Mostly I've noticed the October ones are big money, and then you have a few December ones big money. So that's all the way out here, and they're what, $20 below, so like under 400, around 400. They're saying right around here. Okay, so that's still possible. If you were to just extend this line and say, well, economy in terms of certain numbers maybe are hiding some things are going, not really going as well as it's showing, this could still, head down. Well, look at that. If you say below what, 405, that line right there in December, okay, that wouldn't be a terrible position to be taking, simply because it's a probability saying you're going to stay inside this yellow channel that, below this yellow line that we've drawn, and it's going to reject down and further down from there. Okay, but if there's economic reasons, there's so many economic reasons right now that are potentially going to slow this down. We've got China issues, we've got the harvest issues coming up in terms of the fall. A lot of the, I was explaining, a lot of the fertilizer prices that shot up over the course of the pandemic during the shutdowns. What that did was it created a really expensive fertilizer price for the farmers. Now the farmers had to choose if they were going to continue to make, continue to produce or shut down. So it created a limitation of supply, right? When you have limited supply, but demand stays the same or goes up, everybody still needs their food. Supply is limited, meaning that everybody fights over the same lower supply, shoots the prices up. And as a result, that puts more of a financial strain on the consumer, who now already has to choose between higher gas prices, higher EV prices in terms of if they want to get an electric vehicle. There's higher rent prices that are going to snowball, and that's a 3-month cycle. So August, September is going to show that. And then you also have, what else? A big part of the China potential collapse of their mortgage companies and all of that is an issue as well. And then you also have the whole China and Russia trying to create a second reserve currency for the world, which is supposed to weaken the dollar in ways. There is also talk of China dumping a bunch of the US treasuries right now. And as a result, meaning that they're holding on to more dollars, but what they plan to do with the dollars, who knows, right? So again, there's a lot of resistances here. That's what I want to point out, is that for now, there's a slight bearish moment in this, that, there's so many forces that are going to potentially push this down. And I also want to bring up the moving averages so you guys can see that too. Let me get get rid of one of these. You really shouldn't have to pay for more than that. When you have all these indicators up, you're already looking at too much. So we already looked at these. Let's just pull up our moving average. Okay. Another moving average that's going to act as resistance here. Clean this up for you guys. Okay. So where are we touching? Right at, we're at the 200-day moving average, and look at how beautifully we just bounced off of it, right? So you've got that, you've got the volume, you know, VPVR in terms of the big picture, right? When I zoomed in closer, that's going to give you the highest part. But you have all of this that you see, that your 200-day moving average, right? You have, we're at the top of that box. We also have all of those indicators down here, all showing very overbought or extensive, you know, type of readings. And so let's pull back up my MACD. So I just want you guys to keep that in mind. Yes, there's certain things that aren't quite showing it, but you know, wouldn't be surprising for us to head back down toward this, you know, 100-day moving average, or actually, if let's even do this. Oh, I can't add on a 2. Never mind. There's a 125-day moving average as well that sometimes would be used, and that's right in between these two. I think that will be where we potentially could bounce, and that's going to coincide with the lower bounds of that box that I've drawn for you guys. Okay, that box. All right, let's talk about Apple, because Apple being such a big mega part of the, you know, mega cap, being a big part of the SPY indices, you know, it's a leader for it. And when, you know, when this finally does exhaust itself is when the markets will start to struggle again. Now, we haven't had any sort of golden cross or anything on this, right? This is the daily. But again, very overextended in a lot of cases, not really negative divergence just yet, okay? But let's take a look into, right? Moving average, we're now above it. We are showing curling in terms of the 50 and the 100-day moving average are curling. You know, we're still in that death cross area, so keep that in mind. So, you know, we're at the top of this channel and also the top of this channel. We've bounced off of both of those. All right, let me give you that and show you what I mean in terms of those two bounces. So you got this, let me color code it. Downward yellow channel, right? Just like with SPY. And you've got, let's give this one a green one. This is an up sloping channel, okay? Let's get rid of these right now. We don't need these, but look at that. We stalled out right where that yellow line is, right? I probably have, you know, and then right where the green is, we hit and rejected heavily off of that. This is on the 1 hour chart, okay? Here's where you might want to think of that divergence, okay? Here's the first ones. Down, this one's a lot smaller, RSI. And you do also have it right here with the stochastic. So this is the 1 hour chart, keep that in mind, 1 hour chart. Right here with our prices here, we've kept going up. So that is our negative divergence for Apple, okay? What else? Let's double check it on the 2 hour and then go down to the 30 just as well. Still going higher, divergence here. RSI no longer shows it, but our MACD still does too. Do you see that? MACD still is. All right, so the hot streak's getting weaker. It's still a hot streak, keep in mind. All right, now what else? Let's go into our 30. Okay, so 2 hour wasn't quite showing it yet. So keep in mind, it starts from the smaller time frames and leaks into the bigger ones. Does that make sense? So, you know, yeah, they'll be very tiny and can go back and forth, but let's just say the 30-minute will show those divergences first. Once they really do appear, then they'll start to show on the 1 hour. Once the 1 hours have enough of those that show, then the 2 hours will show, if that makes sense. Okay, so right now it's the 1 hour is showing. The 30-minute, if you notice, this is definitely showing as well. Okay, you do have some higher tops of these, right? Apple keeps going higher, but you got that, and you also have this pretty major divergence here as well. Okay, so 2 areas, very good. Let's go a little bit deeper. Let's go, you know, just for fun, let's go 15 minutes. I don't need to care too much about even smaller than that, but is there anything that makes me think that it'll continue to go higher too, right? We are staying above the 50 on the RSI, okay? So where would you wanna set some targets for this in terms of it? Well, first we would probably look back at where we recently were. You'll notice this big giant rectangle of people, okay? And you do have a little bit that peaked up above, if you notice. So if we break down below that green line, or you can say break down below previous, you know, lows from this recent, you know, candle, then you can aim toward down here toward the yellow line. And then if we do start to involve all these by look at all that volume over here too, right? Let's gather the left side a little bit too. I want to consider the other buyers and sellers on the left end of this. But okay, so if you notice, if we were to move down though, where would we move down quickly, at least in recent areas? This is the bigger areas of support, okay? So we could drop down toward this area. There also is a gap here and a gap here. So keep that in mind. If we are to fill something, those are very, very possible, okay? All right. I want to consider the left side, so let's pull that closer. Okay. All right. We're now above the point of control, right? And we're getting close to what these blue bounds are for us is that first standard deviation. So this is 68% of all the buyers and sellers that are shown on this picture, okay? So that's actually where I would consider, you know, there's going to be a hard push back up from here, right? Now that we're back above here, that'll be your first hard bounce up from. So there's not too much room down to play right here. But again, if you want, you know, if you would, let's consider those numbers and we'll put those values together in one of my checklists. Let me pull up one of those. All right. Let's just share this. This was a AMD one. I'm gonna pull up another one for us. Actually. Okay. I'm just going to create a new one. Okay, so what do I want to go over here? We're going to talk about how this is set up. I'll also pull up the Weeble that we have, and I'll pull up a couple of the numbers for the delta and the theta and things like that. So give me 1 second. I'm just going to pull up a new version of this. Okay. All right. Perfect. Let me share this. All right. Awesome. Let's talk about this. So we're going to fill this out, and I will pull up. I'll just annotate on. Okay. What do we want to do? We're going to do Apple here. Okay. What's the price today at? Let me do 147.60. $174. I'm like, well, I'm tripping. It's not 147, 174. Jeez, Eric. Okay. Today's the date, today's date. We'll just put that on there. Do a separate one because it'll be easier to copy. Okay. So first we could do strat on here, strat above and below, and then we can also fill in some numbers. So, you know, it'll just give us a couple of ideas of where to put things. So you can say the strat in terms of the upper target and the lower target. What would those be? Let me pull that up on the daily here. The daily target for the strat would give us okay, above the 176.05. Okay, above that, what would you target? You could target 178.20. Okay, right. So if it breaks above that, that would be your target. What else? If it breaks below, right? I'll make more room. If it breaks below our previous candle of, what's today's high and low? Low was 172.57. 172.57. Then you would break that down toward the next candle. Next candle would be 171.76. Okay. All right. All right, self-explanatory. If it goes down to this, you could break into that. Now, keep in mind, this is daily candle, so you could also say this to the top of the daily candle or this to the bottom of the daily candle. There's those moves too, okay? Now, let's see, supply and resistance. Let me see if I have mine on my chart. Resistance, so on the chart, there is the resistance 160, 176.11, 176.11, 176.59. So right above us right now, there's actually two resistances. One of them, which is this, right? Which is right where we're at pretty much. And then right above that at 59. So these two resistances also exist, right? Now on the bottom side, do we have support? Yes, we do. Support from previous high and low candles are at 171.08. Okay. All right, so you've got support here. And so I'll make more room and remake it so we can put it down there. Okay, so now you see, you know, we have certain ranges, you know, that we could aim for, right? And what are the values that I see the most amount of, you know, that gathers around? There's these values right here, right? Moving up doesn't seem that great because at the end of the day, maybe $1.50, you could get one whole delta, but that room isn't much to go off of. From the 174 down to 171, 172, at least you got that whole $2 move there that you could look for. So, you know, what else do we see? We saw in the divergences, let's go ahead and just mark these off on here. What were it that we saw? We saw divergence, we saw negative divergence. Negative divergence on the RSI, the stochastic, the MACD. Was it on the daily mostly, right? Or actually, no, not quite yet. The biggest one that we saw was what, the 1 hour time frame. Okay. I'll just write that in here. Okay. So are we overextended? I would say overextended for a lot of these indicators, right? We can go back and fill this in more specifically. But I would really say for the majority of these, they were overextended. I hate the way this works. Okay, so we'll say overextended. Okay. What else? Apple PE ratio. Let's pull some of those up. I'm just going to go back to this so you see. Okay, PE ratio, price to earnings ratio, 28.59. So I'll fill that in for us. Okay, and here's how we can also find our short interest. You can go Apple and then just put an S, and the short volume will be shown by FINRA. Okay. Now, what would you want on a short volume situation? You want to be on the top end of things, right? That means price is going up. If it's down here, that usually means price is likely to start going down, because let me explain this in terms of short volume, right? Day to day, you have shorts either getting in, shorting, right? When that happens, you have this goes up. Okay. And then when it shoots down, that's them covering. That's, you know, when you have them buy back their shares and it shoots down in a short volume, that usually causes price to go up. So this is an inverse relationship, okay? Now, the fact that we're down pretty low, there is, okay, so if, if they, cover, right? Because they're ranges as well, which they want to stay out of if there's a lot of people or a lot of people. There are certain ranges still. So overall, I would say that more shorts are likely to get in, in this situation, but you can also really quickly, let's pull this up. Okay, so day-to-day, Apple, right? It's a bit harder to tell here. Let me do this. All right, so look how it, I know that my chart's not completely perfectly lined up, but what you can see here is you have from here to here, to here, you have a very extreme large group of shorts that piled in, right? That makes sense. And so as that short volume went down, right, you started to have a rally back up. Now, if this starts to go back up, then this will start to come back down, right? So again, inverse relationship. I know that it's a little hard to see, but it still has those characteristics of that inverse relationship. Okay. All right. Let's go back into this because we needed to make this make sense. All right. So short interest has it where it is fairly low, right? You can say that, low. So it's bearish, right? That makes sense? Because if the short interest suddenly goes up, meaning more shorts come in, then it pushes it down, okay? And it more has the likelihood of going up, all right? Volume, let me just peek at volume. Volume for a lot of things has been fairly low because people have been kind of indecisive here, right? Well, today, actually, Apple got some decent volume. Let me look at weekly real quick. Okay, weekly, we're still pretty low. So volume is fairly low. So that is actually also a bearish sign for us too, you might imagine, because that gives a higher probability of the fact that we may have people come to the market to sell now that it's rallied so high, right? Cost to borrow, I don't have those numbers right here in front of me, but if I would assume cost to borrow is pretty low, meaning, because ultimately short interest is low, so therefore cost to borrow is probably low, so very likely gives that a bearish side as well. Okay, now these two, we could go put these over. A lot of these were high up, right? They're higher than they should be on their time frame. Okay, so let me pull up, and I'm just going to in terms of time frame, you could go with like next week or the week after. So I'm going to pull up the 16-day contracts. All right. Okay. I'm going to copy it in here. actually. Hold up. Let's pull up just the puts because that's what we're looking at anyway. Okay. Now I'm probably going to crop this a little bit. Let's just talk about this. Okay, so this is right 2 days out, or sorry, not 2 days. We don't want the 2 days out, right? We could look at these, but they're, you know, okay, one under 180. That's, you know, fairly confident it should stay underneath that, right? Break even is down below that. Volume for that's pretty decent. In the money percentage is fairly high. Implied volatility is decently low, but you know, $500 a contract. Now that same 500 a contract, right? Because you can think of it here. If you add it on, and you would get some, you know, some more stability. So lower IV, okay. But the open interest is fairly low for something like this. This is considered a weekly type of contract. And the money percentage is a little bit lower. There's a chance that it may fall out. And then we've got delta, gamma, theta. All right, so let's talk about these real quick. Let's pick out, you know, because we've got to fill in these up here. We were going to say our entry, let me just, that works. We were going to say our entry here for is going to be what? Right, where we're at, up has those. That's about a $4 move, you may $3 or so. If we go down from here, that's only about, you know, that's about $2 to $3 here, right? But this is this low end entry and resistance as well versus this. Let's take puts on this, okay? So entry, Strat would say enter here and then go down toward that. That's what about a 89-cent move, right? So or 79-cent move. So that's not the best from that entry, but from where we're at, if we already still are bearish, so here down, you know, I just want to use a bigger number here for this calculation. So let's assume that's what position we'd take. So we'd take a position where we were at close, okay? And we're gonna go and say, we're gonna go take puts, right? So down toward this range, what that would give us, and what we're gonna do here is toward 171, so 170, 176, right? Okay. So what do we do there? We're gonna just go and subtract that from each other. So 174.60 minus 171.76, right? And that's a $2.84 move. Okay. So here, what we're gonna do is we're gonna take a look into, let's assume we're gonna take, all right, the in the money percentages for this aren't the best, but let me show you here. Okay, that's a little better. Okay. These are good to look at, but then these numbers are bad. You see that? Okay. IV here is good. It gets worse as you get further out. That's expected, nothing crazy. This is one that is solid, and this is one that's solid as well in terms of number of open interest, okay? the percentages for in the money are not great, but again, we don't need to hold on to it for that long is the hope, all right? And you know, with the calculation, if this value isn't comforting, we can always look for further out. But let's just use this to calculate this, and then we'll find a better one, or a better position to specifically take if we're going to take Apple. So let's take a look here. We are expecting it to move down toward that. So getting something that gets into the money would be awesome. But because we have time, it doesn't have to, right? Now, in this case, if it was the 2 days to expiration, you would want to get that 175 or 172.5, but you really want to be careful because, you know, just as it gets into the money, it could be worth something, but if it reverts, it very quickly loses its value. So 264, let's put that down. So right here, premium 264, okay. Or yeah, 264, that's the ask. Now, actually, I don't like that. Let's do the 3,000 one here. So 187. What's the delta? So we're gonna do this one, the delta right here, okay. Delta 0.3218, our theta 0.1077. Volume's decent too, okay? So let's take a look here. IV for this one is 26%. So I can do that, 26%, I like that. Okay. Now here's where we got that calculation that you guys gotta be, you know, gotta understand. Remember what delta is, right? Now keep in mind, this is just an estimate, okay? Delta here, so $187 a contract for here, the 170 puts, okay, for September 9/2, okay? Okay. Now, if we're aiming for that much of a move, that'll get multiplied by delta, right? So let me calculate this real quick. We've got that times what, 0.32. And so that's going to give you there it is. That's going to give you a 90-cent move or 91-cent move. Okay. Now on that, you got to keep in mind 91 cents added onto that, or technically it's supposed to be out of that, if that makes sense, right? Because you started with it. So that divided by 1.87, this turns into a is a 49% increase. That makes sense, okay, in this contract. Now, how, you know, what would the drawdown be? Well, you got to look at, you know, where would your stop loss potentially be? If you're saying stop me out right here, right, then what you're looking at here, you got to say is another $1.45, right? And so you got to use that same delta, calculate, right, 0.3218 times $1.45, right? And then 46-cent move. So that 46-cent move, that's for this one, 46-cent move divided by the 1.87, that would be a 25% loss. That makes sense, right? And so you could even here show that this value is your stop loss, right? And then this is your target. Okay. And so ultimately not terrible. You know, I would want a better risk to reward ratio if possible. But you know, everybody's got, you know, it's not a terrible position to take, but again, let's look for something better than that in terms of these numbers, right? So what I do in terms of it, and or what don't I like about these numbers? Well, number one, volume could be higher. Well, one way, or not just volume, but open interest. Okay, let me screenshot this next one. So open interest on this is way, way, way better. Sorry, I'm trying to crop this so it doesn't take up so much room. And it still looks way too big. Okay, so I want to point out the one that we just looked at here was the 16-day, right? 16-day. And what that ultimately is, was this one. Now keep in mind, those are weeklies. If you see the W next to them, right? Those expire every week versus the monthly ones are, you can imagine, kind of a bigger picture, bigger marble jar type of thing. Look at the open interest here, guys. Right? You got 100,000 open interest at 150. Okay. So yeah, those are cheap. You know, a move in that situation, right? Your delta is 6 cents. So here we're only expecting a $2 or $3 move. You know, that ultimately would move this quite a bit, but it's still not great relative to it as well. But again, it is, you know, you're leveraging it, right? Your chances of it being in the money type of thing as well often are going to play into it. Your theta also is a lot better in these, right? So theta right here, this just is, you know, if you're going to hold on to it for quite a bit, you know, at least theta, you only need one delta or one move to get that theta back. But keep in mind, this is not something that you want to hold on to for long, especially if you're going with those weekly ones. Let's take a look here. What would be, okay, so safety, you look for about 80% in the money calculation, right? All right, isn't that pretty safe? It's over 75%, 84 out of 5, right? In the situation. Now, those often will be extremely, extremely pricey, but look at it, for every dollar move, you do get a decent return in terms of compared to earlier, where again, every dollar here, we're only getting 90 something cents, but again, it's relative, right? It's relative to the premium that you're spending. In this situation, right, this calculation, right, $2-3, this will be a couple $100 that you'll make, right? 200, maybe 300. But at the end of the day, relative to the G that you have to put in, right, that percentage is a lot different. Okay. All right. Hope that was useful. I know this probably went on a little bit longer than you expected it to, but again, when you look at your market, look at your, look at what it is that you're trying to purchase in terms of an option. Be careful when you get into those situations where you feel like you're FOMOing into things, right? You're just jumping into things because something just happened. That something that just happened often is, in this, like this, a situation in which you planned for. What I do is on these certain, levels that are supposed to break, right? What you can do is you can set alarms for your trading view or for your brokerage to let you know when those things happen, but also on their side, write down what it is you plan to do. And I do hope that this, what we put together here, I do hope it helps you guys visualize things a little bit better, right? There's still other things here, like, if big money comes in and goes on the same side, or you can even list off the different options that they've purchased as well, right? Have you set your stop loss and your take profit and things like that relative to what you're looking at. I think you guys are starting to get a better idea of these things, but you know, if you feel like there's something you can add on to this or something else that we can do to make this more visually appealing or visually useful, go ahead, let me know. I'm more than happy to help. All right, cool. I hope you guys found that useful. We'll chat again soon. All right, talk to you then.